Every quarter, commercial real estate firms release market reports, pages of statistics, vacancy rates, rental rates, absorptions. Useful information if you happen to enjoy reading spreadsheets. The problem is that most of those reports are not answering the questions business owners are asking. Questions like, how does this affect my business? Should I be planning a move? Should I renew my lease? Will I have more negotiating power than I did a few months ago? If you're leasing, buying, selling, or simply wondering whether now is the right time to make a move, that's what this video is about. I'm going to walk through what changed during the second quarter, what it means for the GTA, and more importantly, what it means for Burlington. I'm Susan, that commercial realtor. I work with landlords, tenants, buyers, and investors across Southern Ontario. Let's start with the bigger picture. The biggest takeaway this quarter isn't that the market got stronger or weaker. Just as I'd mentioned in Q1, it's becoming more balanced. So what does that mean? On the industrial side, businesses continue leasing space at a healthy pace, while rental rates appear to be finding a more stable level after several quarters of adjustment down from their 2022 highs. Office leasing also remains active. The rapid pace we saw earlier this year has settled into something much more sustainable, with quality buildings still winning the attention. And that's good news. Stable markets allow businesses to make decisions based on strategy instead of emotion. The GTA still influences Burlington. Large companies relocate, supply changes, investment capital moves. Those trends eventually work their way west. That said, Burlington has always had its own story. If you're looking for industrial space, one thing has become very clear. This isn't just one industrial market anymore. The best buildings, those continue to attract interest. Those with modern loading, adequate power, good clear height, efficient layouts. The opportunities for deals are showing up somewhere else. In those older buildings with less efficient layouts, limited power, poor truck access. Those properties take longer to lease, and this is where tenants have gained negotiating leverage. So if you're searching for industrial space, consider whether you're looking at the right building. Do you need all the bells and whistles of premium industrial space, or can you work with older buildings? Demand for industrial space in Burlington has not disappeared. Functional space still continues to win. The question is, what's your definition of functional? Office, it's telling a different story. The question isn't how little office can we get away with, it's what kind of workplace helps our business succeed. Companies are placing greater value on locations that help attract employees, create a better client experience, and support the way their teams work every day. Landlords, they know this, which is why today's best negotiations often have very little to do with the asking rent. The biggest opportunities are usually found in the business terms, and that's where real value can be created. Items like tenant improvement allowance, free rent, flexibility, timing. Which is why I encourage my clients to negotiate the entire lease, not just the number on page 1. What am I going to be watching for in Q3? Well, markets don't change overnight. They leave clues. These are the 4 things I'll be watching over the next few months. First, I'm watching whether industrial rental rates stabilize. The pace of correction has slowed considerably, and if that continues, we may be entering a much more predictable leasing environment. Second, I'll be watching whether Burlington's Class A industrial buildings continue to outperform the rest of the market. Third, I'll be watching office incentives, not necessarily asking rents, the incentives. Landlords have become increasingly creative, and in my experience, that's where the best opportunities are found. Base rates are one thing. Net effective rent, well, that's a whole different story. Finally, residential real estate. It sounds unrelated, but a healthy housing market is often an early signal of business confidence. When homeowners feel secure, businesses tend to feel it too, and that's usually where hiring, expansion, and leasing activities start. So if you're wondering what to do with all of this information, my advice, if you're a tenant, and I say this often, start planning early. This is a market that rewards preparation. You'll have more options, more negotiating time, and be able to make better decisions. If you're a landlord, presentation matters more than ever. The buildings that lease quickly usually solve problems before tenants ever ask the questions. If you're buying, focus on functionality. Good buildings continue to outperform average buildings, and Class A is not always the best building for your company. Keep an open mind. If you're investing, don't get distracted by quarter-to-quarter headlines. Focus on long-term fundamentals. Strong locations, strong tenants, and functional buildings. Those metrics, they haven't changed. Every quarter brings new statistics. The numbers change, the headlines change. Good decisions don't. They come from understanding what the market means for your business, then planning before you have to act. That's exactly what these quarterly updates are designed to help you do. Subscribe for future Burlington Commercial Real Estate updates where I explain what the market is doing and, more importantly, what it means for your business. Like this video if you appreciate straightforward commercial real estate advice. And save it before you need it. I'm Susan, that commercial realtor, built for business, backed by data, negotiating with bite.